When's the right time to sell? When you're ready.
Yeah.
There's no perfect time. You don't know what black swan event is coming. So run your business in the best possible way every single day that you own it. And when you start feeling like it might be time for the next chapter in your life, don't be afraid to step into the selling process. You don't have to say yes. You can walk until the wire transfer hits your bank, right?
Mm-hmm.
But what I see time and time again, that's the last thing I'll say, is the actual reason that someone is selling their business and they're talking to me is that they're burned out.
All right, everybody, welcome back to another edition here of the Kronos Group Podcast. I am your host, Jerry Brazie, and am excited to have Marvin Karlow today. Let me tell you all about him. He is someone who has been on both sides of the table. He's been a small business owner and a C-suite executive and an equity investor, and he's built companies, acquired them, grown them, and exited them. One of those was a manufacturing service business carved out of distressed private equity. That's interesting. And later sold publicly. Got questions about that. He's been involved in everything from small private deals to large corporate transactions. And today, he is helping middle market business owners sell their companies using that same disciplined M&A process the big firms use, helping owners not leave money on the table, something critical when you are making or when you are selling that thing that you have grown. This conversation is for business owners who are thinking about an exit, even quietly, and want to understand how this really works before your emotions and all the pressure and all that takes over. And what I'll say about that is, if you are thinking about selling, quietly is the way to do it, to just start having conversations. You don't want to run up to something like that. In my experience, we'll talk to Marvin, you want to be careful about it. So with that said, Marvin, really glad that you are here today. How are you, my friend?
I'm fantastic. And Jerry, it's an honor to be here. Thank you. You guys do a great job with this podcast. And I guess maybe I have a little bit of a self-esteem issue or whatever, but I'm always just really shocked when someone says, yeah, we'd like to talk to you for a couple of minutes. So yeah. Thank you for having me.
Absolutely. And I think that to a person that owns a business or somebody on the outside of a business that might be interested in how these things work, I want to give a good overview, hopefully from an entertaining perspective, on what goes through both people's minds, both the purchase side and the sell side. But before we get too far in there, leading up to your business career, just give me, I find folks love to know where you come from. Where do people come from? Where were they born, raised, kind of what's their background prior to, what the main subject is that we're here to talk about?
Well, I mean, I'm in my 50s, so I'll give you the thumbnail, but I grew up for the most part in Southern California. I got a degree in science, and then I got a PhD in physics. And then I worked my way up the corporate ladder, sort of ultimately ending up as the chief operating officer of a big software division of a global company. Exited that career and went kind of to the absolute opposite end of the spectrum. We bought a metal finishing business in Florida with no air conditioning. So, went from a corner office to no air conditioning. It's a little bit of culture shock. But we grew that business, as you mentioned. We also, as part of that, carved out another similar business. That one happened to be in the Dallas area. And ultimately, we merged all of that together and kind of exited the combined company to a publicly traded acquirer. And when all that sort of wrapped up, I thought maybe I can help other business owners have the same kind of success that we had when they exit. Because what I'd seen through my career and really gotten pretty sort of passionate about was, for people whose companies are worth less than, call it $100 million, there's not just really great representation out there. I mean, if you've got a $250 million company, there are really, really smart people in investment banking who will take your deal and make sure you get the absolute best outcome possible. But if you've got a $20 million company, there's a lot of people out there who just frankly don't know what they're doing, are playing a numbers game, and aren't necessarily going to get you the best kind of outcome when you exit. Or even worse, they're going to kind of screw up the deal and it'll bust and you won't exit at all. So I didn't think I'd change the industry, but I did think I could help a few people. And honestly, this is the best job I've ever had. I love this. I love business owners. I love talking to people. on the buy side and on the sell side and helping to get really high quality deals done for business owners who have put their blood, sweat, and tears into making something.
You hit on the number one item that I wanted to talk about, or that I wanted to ask you about, I should say. I was at a small business expo a couple of months ago in Dallas, where you're from, where you are right now, as a matter of fact. And I was talking to a young man. He was, I don't know, early 30s, and he was getting into the M&A game. He was working for a large outfit out of New York, representing them in Dallas. And he said, I said, what are you doing? And he said, I'm looking at 5 million plus EBITDA companies to rep on either side of the sale, and some other deals. We're trying to put them together and ramp them up and, get a bigger multiple. I said, well, that's interesting. How many deals have you done? I've been at it for 2.5 years and I've done one deal. And I said, well, what's going on with the sub $5 million EBITDA companies? And he said, yeah, I don't look at that. And I thought, well, that's a strange approach for a new guy getting into the business that doesn't have any experience. And he's primarily looking at that. And he said, well, what do you think I should do? So I gave him, I've bought and sold dozens of businesses over my lifetime. And I said, the biggest problem I see in the market, let's say sub $25, $50 million, is the representation that they get. So you brought it up. I'm going to pile on.
Okay.
For 6 and 7 figure, 8 figure businesses, business brokers are the bane of our existence. They're literally hated on both sides because there is just a lack of professionalism to it. It's almost like I just want to make that car sale so I can get my commission for the month, or get the commission on this deal done. And both sides feel alienated. Again, I've done this many. I quit using brokers after my second deal and just started doing it on my own for just this reason, because in that 7 and 8 figure price market, I couldn't find anybody. I found competent people. I couldn't find reasonable people that would go to war for me from my side the way that I would want them to. So as you brought that up, again, my experiences are in 7 and 8 figure deals, but expand on that a little bit, because I think this is really important when you have spent your whole life building a company to turn it over into the hands of somebody who, frankly, has an idea of what's going on, but isn't a professional at it.
Yeah. Well, thank you for the, thank you for the agreement. So I have a rant, and it really nets out to the person that cuts your hair, right? Or unplugs your toilet, or fixes your air conditioner in the middle of the summer when it breaks. Those people all have licenses, right? They're on the wall at the barber shop or the beauty salon. They're on the side of the truck. Business brokers, you use that term, they're not licensed. In some states, all you need to be a business broker is a realtor's license. And in other states like Texas, you don't need any license at all. That's crazy. There are licenses. So FINRA, like if you're a stockbroker on Wall Street, you have to have a FINRA Series 7, okay? There's a FINRA Series 79 that's for investment banking. There's also a Series 83. In my opinion, if you're in this business, if you're representing anything more than a $50,000, pool route, you should be licensed. But there's absolutely no requirement technically. It's a little bit of a gray area under SEC rules, but the practical reality is that the vast majority of business brokers, M&A advisors, whatever term they use, are not licensed. Yeah. And as a result, you have no idea whether they know what they're doing or not. Not that the license guarantees that anyone knows.
Yeah, I was just going to say, I've had a lot of real estate agents in my time. So the licensing does not guarantee anything for sure. You're right.
It doesn't guarantee anything for sure, but it at least says, you know what, that person, got 5 or 6 different books. They studied for, several months or years. They went someplace and they sat for a series of 2 or 3 hour tests and they passed the darn things. Like it just shows some level of investment, I think. But to your point, there are still people who are just playing a numbers game. And I think the way you figure that out. So what we do at Raincatcher is we follow the same process that that, a Wall Street investment bank would follow kind of for any deal they were trying to do. And the key is that they don't put a price tag on the business, right? So if you go on Biz Buy Sell and you look for businesses, the vast majority of them will say, X revenue, Y profit, Z purchase price, right? Well, okay. No one's going to pay more than Z. How did you come up with Z? How do you know that that's really the market value for Z? Sure, there are formulas and whatever out there, but this is not a super liquid market. It's much less liquid than real estate. It's certainly orders of magnitude less liquid than the public equity markets, the stock exchanges. Well, in a fairly illiquid market, the old adage, something's worth what someone will pay for it, is absolutely, kind of the core truth, right? Mm-hmm. And so the only way to find out what someone will pay for someone is to ask. And so we run at Raincatcher, we do what middle market investment banks do, which is we run closed bid auctions. It's not the same as like raising a paddle, but we go out to the market. We say, this is the business and the company that's for sale. Sign an NDA. We'll give you all the details. You go off into a dark room and do your analysis, and you come back with what you believe about the business is worth to you, if anything, right? But if you would like to own this, tell us what you'd be willing to pay for it. Well, it's shocking. I mean, I would say that 80% of the time, we get bids that are above what we thought the valuation would be, right? Just the initial bids come in higher than what we thought. Now, we're conservative. Like, we don't want to set expectations and then miss them. But we get bids that are above what our conservative estimate of value was. Well, now you've got these people in a competitive environment, and this part kind of is like bidding at your school PTA auction or whatever it is. Jerry, you want it, I want it, the guy down the street wants it, and we know that there are other people bidding. Well, what does that create, right? FOMO. And so you're going to stretch your bid. You're going to improve your terms. You're going to think hard about the feedback that someone like me as an intermediary is giving you about your offer. And you're going to take that into account because presumably you're not doing this for practice. You'd really like to own this business, right? Mm-hmm. And so when you go through that process, which takes time, it takes a lot of work on our part, which is why most people don't do it. The business owner feels like, you know what? 200 people signed NDAs and got into the data room. 30 people submitted initial offers. I talked to 20 of those people. We got 10 LOIs. The top 3 were all pretty similar once Raincatcher negotiated them. And I'm going to pick one of those. Right? Well, that's how you get the maximum possible value for your business. And I don't know of another way. Putting a price tag on it and taking the first offer that comes across the transom is not the way. I do know that.
And so let's flesh that out a little bit. So what you're obviously in any situation where you're trying to sell something, 2 people who want to buy what you have is better than 1 person trying to buy what you have, and 10 people is better than 2 people, goes without saying. But I would be surprised if the vast majority of people that will listen to this that either have practical business experience or just looking at it from the outside have any context how many businesses are not sold in an auction environment, regardless of the size. Now, I'm going to guess, because I've never done that before, I'm going to guess that the auction environment, to your point, is much more difficult to gin up interest for from a broker side. It takes a whole lot more work. It's much easier to place that biz buy sell ad, answer some phone calls. I'll give you an example too on a broker story. I have some family members that are young guys looking to buy a business, the first business ever, and it's a laundromat. And so I said, great business, that's fine. I'm happy to help you. And they sent it to me, and I broke down all the reasons why they should or shouldn't buy it. And then they went to look at it, and the broker told them where to go and did not meet them on site for to buy the laundromat. It's just a perfect example because, again, they answered an ad. It's got a price. Then there'll be some negotiation ostensibly, but there's no auction. So let's talk about that auction a little bit, because that to me sounds to me to be the place where a significant value add is being placed on this and really where you're earning your money?
Well, it's certainly part of where you're earning your money, at least on the front end. So, it relies on a fair amount of data that we at Raincatcher developed over some period of time. We've got 20,000 buyers in our database. Now, not all of them are necessarily interested in the laundromat, to use your example that I'm listing. 2,000 of them might have listed laundromats as something that they're interested in. Well, we're going to email all of them at the same time tomorrow, about this deal. Okay. Right. So that's one way. There are also networks. Not cost money to be a member of these sort of private networks, but private equity firms hang out there, high net worth individuals, family offices, etc., are on these networks. And so, if the deal meets the criteria to be on that network, we list them there. We get a lot of interest from that. We have a well-trafficked website. And if you're looking to buy a business in the lower middle market, which for us is kind of $100 million enterprise value and below, $10 million in profit or below, you probably know about Raincatcher.com and you've probably got our business listings page bookmarked. So anyway, but yes, it's a lot of work. And, I gave you numbers that are sort of realistic for kind of an average deal for me.
Mm-hmm.
If I put 200 people in the data room and even 30 of them, it's usually more like 50, want to have a conversation, well, that's 30 to 50 hours of my time that I'm going to spend talking to people, plus all the follow-up, plus all the, the emails and the questions and the admin and right. It's a lot of time. It's a whole lot easier to just say, hey, we'll sell Jerry's business for $2.4 million. And the first person that calls, it sounds like they might have $2.4 million. We go, yeah, sold.
Right. Okay. And yeah, I love the whole idea of it in practice. In theory, for the smaller companies, let's talk, low 7 and 8 figures, which is, the vast majority of small business. What is the practicality of being able to find an outfit at that size to gin up an auction, multiple bidders for their business?
Well, so Raincatcher lives in the 7 and 8 figure deal.
Okay.
Range.
Okay.
That is where we live.
Okay.
So here's kind of how it breaks down, Jerry. And I don't know how many people really know this. So most of your listeners are going to be familiar with the Small Business Administration. They're going to be familiar with the fact that the SBA guarantees loans. They're called 7A that are for business acquisition. Okay. The catch is that they don't guarantee a loan bigger than $5 million. Okay. But what that creates is a very active market for businesses whose value is $5 million and below. You can get one of these loans with 10% down, so long as you've got reasonably good credit and whatever. Not that I necessarily recommend that, but you can. And so if you find a business or if you see a business listed and it has, make it up, $750,000 worth of profit, and you're going to pay $3 million for that, well, you can get that loan for 10% down, guaranteed by the SBA. And that makes my humble opinion is, the SBA is very quietly responsible for a significant amount of the American dream success that occurs in this country. You go to Europe and other places, they don't have anything like that. And the market is much less liquid than it is here. There's much less activity. Okay. So now let's go to the other end of the spectrum, right? $100 million and above. Those are they're not a ton of those deals, but those things make headlines and whatever. As you work down into the true 8 figures, if you've got a business that's worth between $50 and $100 million, you can find someone to run an auction. There are people kind of playing in that range. You get much below $50 million in value, which is, call it $4 to $5 to $6 million in profit. you're kind of in this zone where not a ton of people are playing, and you really do. There are other firms like Raincatcher. We are not unique. We are unusual, right? We're 2% or 3% or whatever, but yeah, it relies on having a pretty big network, having a pretty big database of the private equity firms, the independent sponsor world, the search fund world, and we kind of have all of that, and we know what they're interested in. And so when we put a business on the market, we're going to send out 2, 3, 4, 5,000 emails with a teaser, and that's where the 200 data room people come from, and that's what starts the conversations, and that's how we get, 10 LOIs.
You said something a minute ago that I want to come back to that I always talk about myself, and that is that for the vast majority of business, what is there, 33 million small businesses, give or take, and some 30 million of them are solopreneurs. The average business size is $400,000 to $600,000 a year, somewhere in there. I really pound that all of the time so that, again, people thinking about business or in business have some concept of how big their companies are or how important they are, what a chunk of the economy that it is, and that the thing that you said that caught me was, over 100 million, they got a different set of rules, and it makes all of the headlines. In my experience, there is very little connection to the way those guys do the things that they do, and what we see on social media and what Forbes is talking about, or all of those,
MSNBC,
relative
right,
to the corner shop guy that owns the land underneath his building, and he's trying to, this thing he's owned for 30 years, he's trying to sell it. And so I always encourage people not to look at that.
Correct.
Because it has very little basis in reality for us common folk, to use.
Correct. No, they're two very, very different worlds. They're two very different worlds. Okay, so let's break it down into 3 groups, right? Let's break it down into, you said solopreneur, and I with respect, okay, with the utmost respect to those folks, that's a job, not a business.
Mm-hmm.
Okay,
Mm-hmm.
so if your profit is less than $500,000 a year, right? If you don't have any employees, if you really do all the work yourself and you don't have a bunch of it outsourced, et cetera, it's a job. It may be an extremely high paying job, but it is really 100% dependent on you. And we have a saying in the business, nobody wants to buy a job, right?
Mm-hmm.
Even if they could, right? A single doctor medical practice is a pretty good example. Like, I can't go buy that. I don't have the credentials, right? I don't have all the relationships, whatever. Consulting's another one. Okay. So let's sort of set that. And I think $500,000 is kind of a good cutoff. I'm not saying that there aren't businesses with profit less than that. Like the laundromat that you're talking about, it's probably not doing $500,000 in profit a year unless it's a big laundromat, right? But that's a business, right? That's a business that can be sold. Why? Because it has physical assets. It has a location. It has
real estate.
It has cash flow. It has all of these things. Okay. But again, to use the sort of 500,000, if you own a $300,000 a year laundromat, list it on Biz Buy Sell it yourself, don't pay a broker, right? And for we call them sort of Main Street businesses. There are enough of those out there that you can kind of figure out what's the going rate for a laundromat, right? Mm-hmm. What's the going rate for a convenience store? What's the going rate for, some of these things, right? Okay. Now let's get into sort of the $500,000 to $10 million profit range. That's what's thought of as the lower middle market. So that's not where these other guys are not playing anymore. Right. All right. Well, now, you've got real cash flow. You've probably got some employees, or you've got, if it's an e-commerce business or an Amazon FBA business, you've got some pretty significant vendor relationships and supplier relationships. And you've got an SEO firm that you write a pretty big check to every month, and et cetera, right? This is a business. And even if you're sort of technically the only employee, it's a business. And those businesses trade on some multiple, we call it EBITDA, earnings before interest, taxes, depreciation, and amortization, right? Which is just a fancy way of saying sort of a normalized profit. Okay, so just think about the way I think about it for most business owners is how much total cash are you taking out of the business every year in terms of salary, perks, distributions, whatever. Add your car payment that you're running through the business, all the things, right? The total cash you're taking, that's a pretty good proxy for EBITDA, all right? And then multiples are somewhere between 3 and 10. I realize that you can drive a truck through that range, but it really, really depends on a whole bunch of factors. We can talk about some of them if you want, but 3 times $1 million in EBITDA gives you a $3 million business, right? 10 times it gives you a $30 million business. Somewhere in there is where you're going to land. I'm going to double click on your point. The multiples and the things that, the transactions that make headlines where it's, $1 billion for a company with no profit. There's a reason that transaction made headlines. It's not the normal deal, right? And those bigger deals trade. One of the things that drives a multiple is how big the company is. So $1 million in EBITDA for the same business is going to get a lower multiple than $3 million in EBITDA for an identical business. They just pay a higher multiple for the bigger EBITDA, right? So if the company's got $25 million in profit and you're looking at that multiple and thinking, oh, my $250,000 in profit is going to get the same multiple. It's not. Okay. So, but those are really the two factors. What's your profit? What's your cash flow? Right. And what multiple do you get? And that's sort of how 0 to 0 order valuations get worked out. And you're either going to sell it yourself if it's really small, right? God help you, you're going to work with a business broker who's going to just wait for the phone to ring, or you're going to find a firm like Raincatcher who is going to charge, a percent. In this case, it is kind of like real estate. We're going to charge a percentage of the purchase price as our fee. We only get paid if the deal closes, right? But we're going to charge a percentage of the purchase price. And then we're at Raincatcher, at least, going to go out and run a process where the front end of that process is get as many interested parties as possible all together in the same sort of virtual room bidding for your business, and then work out the deal that is the best fit for the goals you're trying to achieve as part of this exit, whether it's highest purchase price or best terms or most cash at close or upside on the back end, or there's lots and lots of things that go into deal terms, and we negotiate those to be the ideal, as close as possible to ideal for you and your situation.
And so in that environment, for someone who you go through all of that, you've sent out all the emails, you run your auction, you get the 3 bids, the owner chooses which one he wants to take. He takes it and he signs the deal. And you go home and you tell your family, I signed a deal to sell my business. Let's talk about how what you just talked about doing is actually the easy part about selling a business, because now the real world kicks in and now the real work starts. So let's inform and educate the folks on what I'm talking about here, because you just did the easy part. Let's talk about the hard part.
Yeah, for sure. Well, I'm really glad. So here's my example. So Jerry, let's say that you and I, or my visual for this, right? So let's say you and I decide that for reasons that pass understanding, we're going to go climb Mount Everest together, right? We're going to train, we're going to go do it, right? So my question is, what's our goal?
Get to the top.
Is our goal to get to the top? That's exactly right. That's what everybody says. Right. Guess what? That's not the goal.
Oh, survive?
Survive.
Survive.
And what does it take? What does it take to survive? Well, you've got to actually get back down.
Yeah, right.
To base camp, right?
Right.
Well, guess where 85% of people die? On the way down.
Yeah.
No one, not no one, but only a small number of people die on the way to the summit, right? Mm-hmm. Everybody dies trying to get back down, right? It's the same way in the deal, right? So break this down. Base camp is we sign an engagement letter and we're going to start marketing your business. The summit is we signed the LOI. What happens at the summit? We all celebrate, we take selfies, the little flag, blah, blah, blah. And then the real work starts. Now we got to get home. Okay. So what does home look like in a deal? Well, there's 3 or 4 components to it, right? There's due diligence, and that's typically a deep dive on your financials, a deep dive on your operations, a deep dive on your HR if you've got employees, a deep dive on your legal, your contracts, your vendors, your suppliers, your customers. If you've got real estate, there's going to be environmental. And I mean, it's a whole list. Just as an example, when we sold our company, the due diligence checklist was 1,200 questions.
Mm-hmm. Yeah, and I
Right?
think, let me interrupt you real quick and just say, so the folks understand, you have to prepare yourself for this. You want to be ready for, you're selling something at a significant price, if you're lucky, to someone else. That someone else is not going to not open the hood. They're not going to put the car up on the lift and look underneath of it. Right. And they're not going to check to make sure there's no sugar in the gas tank, or they're going to check to make sure there's no sugar in the gas tank. And you just need to be ready for that. So what you're talking about is not unreasonable if it's 100 questions or 1,200 questions, because they're spending real money for something that you want them to do this due diligence, because we'll talk about when the deal goes bad, how expensive that gets post-deal closing in particular. Correct. So I just want to make that point and let you talk about that a little bit. That's not a bad thing.
It's absolutely not a bad thing, right? It is for sure a frustrating thing at times. It is for sure a little bit overwhelming if someone hasn't prepared you for it.
Right.
Right. And it definitely takes some work to get through, a 22 tab due diligence spreadsheet with 1,200 questions. 27 tab due diligence spreadsheet with 1,200 questions. But it's very doable, right? So, and to your point, right? What is so think about the buyer mindset for a second, right? One of the things that a buyer is really, really concerned about is, am I being lied to? In the worst case, is this seller committing fraud? I have 2 very, very good friends who are very qualified guys who have done quite a few deals. And to make a long story short, the seller is now on there's an FBI warrant for the seller's arrest. They're no longer in the country because they absolutely perpetrated a fraud. So it happens. And so you've got to be sensitive, a little bit compassionate, I suppose, for your buyer. They're stepping into a complete unknown. And in the back of their mind, they've got a little voice saying, is Jerry lying to me? 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 Right. Okay. So the purpose of due diligence is to go through and just really make sure, hey, I, as the buyer, really understand what it is that I'm buying. Okay. Now, the reason that due diligence blows up deals is I find something that you didn't tell me about that's significant, and now I'm triggered, right? Yeah. There's only 2 possibilities now. Either you're lying, which means what else are you lying to me about? Or you didn't know. And well, that's innocent. Now I'm wondering, well, what the heck else that's important do they not know? Right? So you're either dishonest or you're stupid. Neither one of those are really conducive to continuing the deal, right? So a good investment banker, right, a good broker is going to have worked through all that due diligence with you before you ever get to that stage of the deal.
Right.
Okay. That's one piece, right? The next piece is all the legal, all the purchase agreement. Okay. Now, due diligence feeds into the purchase agreement because in addition to the financial terms, the really important stuff in a purchase agreement are what they call representations and warranties, right? So you're representing or you're warrantying a whole set of information, right? The obvious thing is last year's financials, last year's tax return, right? Those are going to be attached to the purchase agreement. Well, those have got to be accurate. You're representing, this is the financial performance of the business that I'm selling, right? If there's real estate, well, that's going to be included. If there are trucks, if there's machinery, if there's going to be all these schedules of things that you're selling with the business, the assets of the business as an example, and those have all got to be accurate. Well, someone's got to go produce all those, check all the serial numbers, note down the mileages, whatever it is. It's all got to be listed out. There may be a list of contracts. Hey, you're building some widget and you've got 47 different suppliers that make you parts that all go make up your widget. Well, all those contracts have got to be listed and all the, so due diligence is a big deal. And if, it's all second nature to you because you've run this thing for the last 35 years. But for me or Jerry, you walking into the middle of that, you don't know up from down, left from right, and you've got to get it all sorted. Okay, so that's due diligence. Then to your point, that feeds into the purchase agreement and all that stuff gets represented and warranted. And by the way, that's a really good thing for you as a seller, right? You want all of that stuff represented and warranted and correct, because what happens some fraction of the time when someone buys a business from someone else? Well, they're not nearly as good at operating it as the former owner. It goes badly from a financial perspective, maybe really badly. And then some fraction of those people want somebody to blame. Well, who are they going to blame? Well, they're going to blame the former owner. You lied to me. You didn't, you didn't tell me something. There was some reason why, there was some undisclosed thing, and that's why I failed. Well, what's your defense? Well, no, it's right here. It's on schedule, 2.7D, the expiration of this key contract with this key supplier for, part number 17 of the widget expires in 3 months, and there's no automatic renewal, and you couldn't find a replacement, and that's why you couldn't build widgets for 6 months. Not my fault. I told you it's right here. You don't have a case. You don't have a damage model. You didn't know. I mean, you knew. I told you, right? So that's why that stuff's important. That's why we spend a bunch of time on it. It is a huge pain in the ass. There's no doubt about it. But it really is in the seller's best interest to go through it in detail, because that's your protection after you close that prevents them from coming back and suing you for the money that they paid.
And the reality is that if that's done correctly pre-auction,
yes,
you're going to know what you believe that company to be worth at a minimum, because you have all of the information. So, so if they come in and do their due diligence, not during your due diligence prior to selling the company, chances are you may find that the company's more valuable than you think it is, because you've done your acquisition level due diligence prior to having somebody come in from the outside and look at it.
Correct. Yeah, that's right. And we don't, we don't go to the same level that a buyer is going to go typically. But what's really important about that is, if you sort of circle back to the who found it, right? Here's one of the big myths about selling a business. In order to sell your business, it has to be perfect. No, it doesn't.
Right.
In fact, to some level, having some issues in the business that are sort of left for the new owner to fix, that's kind of their opportunity. That's kind of their upside. If you've really eaten all the meat off the bone, well, okay, that's a great business, but I don't really have any upside as the new owner. Okay. So that's one way to look at it. And then the other thing is, given that every deal's got issues, what's important about the issues is not that they exist so much as it's that they're disclosed, right?
Right.
So, I'll just use that example. Hey, this key contract expires in 90 days from the, expected closing date. All right. Well, that might be a deal killer. It might really be a deal killer if I find that without you telling me that, right? But it's not a deal killer if we say that, and oh, by the way, we say, and here's our plan. We're already in negotiations, whatever, right? So the issue, whatever it is not the problem. It's who finds it without it being disclosed that's the problem. So the purpose of our sort of pre-LOI or, pre-due diligence, sell-side due diligence, is to surface all of those things, which, by the way, most owners know all of them anyway, and just put them on the table, right? And we get them on the table up front, provide context for them. Absolutely, some issues are a deal killer for some buyers. That's fine. We didn't want to talk to them anyway. And we get it down to the subset. I mean, we're selling a company right now, and there's some privacy concerns. And the number one reason that we're getting why someone doesn't want to buy this business is GDPR, which is the European privacy thing, right? We love that. We've got that right up front in the headline, right? Because if that's going to knock you out, then there's other things down the road that are probably going to knock you out even harder. So
Right.
let's just have you go away. We don't want to talk to you
Yes.
with respect. Like, we'll talk to you about the next deal. So it's the same thing here. Get it out up front, get it on the table. And now we're talking to people who have experience with that, who can deal with it, who know what to do, who aren't worried about it, whatever. So those are and by the way, that's where we as investment bankers earn all of our money.
Mm-hmm.
Finding a buyer is relatively easy compared to shepherding this process all
getting
the
the
way
deal
through.
closed.
Yeah.
And that's to your point. I want everyone to hear this. I'm in my businesses and in my consulting, I often say that for me, business is not an emotional thing, right? There's no money to be made in emotion. You can be passionate about the business that you work in and the work that you do, but there's no emotion in it. And so it's probably no more obvious or does not come up more than during a buy or a sell, particularly the person selling their business, because there's this emotional attachment to it. And on the sell side or on the buy side, I always say to the seller, one of the things that come back all the time is, I don't want to bug them too much. I don't want to seem like I'm too anxious. And I said, no. You don't have a real seller if they're not willing to communicate with you. If they're not willing to have, if they're not or a real buyer, if they're not willing to have hard conversations with you about timing or pricing or whatever it is, no matter what the question is, then you don't have a real buyer, because there's this emotional component to this thing that we are selling that's important to make sure that the company continues to do what it's doing and continues to grow its value. But at the same time, as owners, it can be tough to sit there with somebody like yourself and hear about that business, and you want to argue and you want to fight and you say, yeah, but if this, then that. And that's really where the money gets earned, is helping to kind of sift through the things that are important from a valuation perspective and maybe are just as opposed to important to the owner.
And so one of the things I say so I agree with everything that you said, and I'm just going to sort of double down on it. So, we joke a little bit that, some part of our job is to sort of be therapists.
Sure.
Right?
Yeah.
But it is really an emotional thing. And it's not just that you love your business and whatever. It's that for a lot of business owners, this is the most, or, for sure, one of the most significant financial events in their lives, right? They're invested in it. Their family's invested in it. But you're right. There's no money to be made in emotion. And I think sort of the third area that we as transaction advisors, investment bankers, whatever it is, earn our fee is not only just in kind of being emotional support or therapy or a sounding board or whatever, but there's a point in every deal when, as my friend used to say, it's nut cutting time, right? It's like, this is the moment. And because no deal's perfect, no negotiation is flawless, no, structure, is risk-free. And at some point, I've got risk, you've got risk, I've got investment, you've got investment. And we just have to look at each other across the table and go, all right, I'm going to take this final step with you, and there's some trust involved, and you're going to do the same thing. And sometimes to get over that, you need a bad guy. You need a lightning rod. And we provide that, right? We're sort of the referee in the middle, kind of keeping the two parties friendly with each other, right? So what I want is everyone to be mad at me.
Yes.
So that the buyer and seller are not mad at each other.
That's right.
Right. And so that's, I think, really the third leg of the value stool is, listen, we're just there as kind of this independent third party. Now, granted, we've got vested interest and we have a fiduciary responsibility to the seller because that's who we're representing. But when it really comes down to it, we end up kind of in the middle, and people can be upset with us. They can be mad at us for delivering bad news. They can be, torqued about the process or the delay or the whatever it is. but they're not mad at each other. And so long as we're not putting our finger on the scale, right, for deals that should close, that kind of keeps them moving forward, or they might blow up for emotional reasons.
Yeah,
So, I mean, I have sellers and buyers say things to me all the time in anger that if they'd said them to the other party could have blown up the deal.
right.
But okay, good. You got that off your chest. Are we good now? Like, can we finish the deal?
Nothing wrong with, I'm glad we got that deal done. It was a pleasure, but that goddamn broker.
Right. Oh, exactly right. That's exactly right.
You'll take that.
Right.
In the last couple of minutes we got left, give me just a quick answer. I had a couple of very specific questions I want to ask you as somebody with your experience. What's the biggest myth owners believe about selling their businesses that leads to regret? So the deal's closed, right? And ultimately they go, God, I should have done X and I didn't. Is there a myth that owners believe about selling their companies that lead to regret after the deal closes?
You know what? I don't know if it's a myth, but I do see a lot of seller remorse. And the reason is that they're not confident that they got the most the market would bear at that point. And the reason is that they took the first deal that came across the transom.
Yeah, right.
Right. They didn't run an auction.
Yep.
And they didn't have 3 people say, this is it. If someone bids more than this, let them have it. This is our limit.
Yeah.
And until you get people there, you don't know whether you left money on the table or not.
I like to do at the end of these podcasts a little speed round when I have guys on like you. And this is just kind of give me right off the top of your head in as few words as you can possible related to this topic. Let's see what we get up with. Most overrated valuation metric.
Multiple of recurring revenue, multiple of ARR.
Now you got to flesh that out just a little bit so folks understand that. Because again, back to the $100 million deals, we hear that all the time. The companies are selling for multiples of revenue. Let's explain that. Yeah.
I mean, you'll see 10 times revenue with no profit. Where'd the hell that come from?
Right. Right. Not something those of us in the real world ever get to see again.
Never see it.
Right. One thing buyers say they want, but they don't really pay for.
Wow, that's a really good question.
Well, I'll go to the next one. Let's think
go to the
about
next
that.
one.
The most this one's more important anyway. The most.
Let me answer that question for sellers.
Yeah.
Sellers all the time say my legacy is really important. It's not. They always take the most money. Not always. Almost always take the most money.
That's a fantastic. I writing that question could not come up with a good answer for it. So I well done. The most emotional moment in a sale process.
The final negotiation on the purchase agreement.
Okay. Not the deal closing. Okay. The final deal once it's written. Interesting. A quiet.
Because that's where you got to say yes to stuff you don't want to say yes to.
Yeah. Interesting. A quiet red flag that kills deals.
Too much owner reliance.
I'm sorry?
Too much owner reliance. You told me you spend 20 hours a week in the business, and when I get under the covers, you're actually working 50 hours a week.
Right. And the best time to think about selling, earlier or late?
No, now. If you're not thinking about this is my opinion. There are plenty of people out there who will argue that I'm completely wrong. Okay. So Google it search it on YouTube. If you don't like my answer, you can find plenty of people who disagree with me. My view and the way we ran our businesses was our goal was to be ready to sell at every level in the business every day the doors were open.
Mm-hmm.
And so we made decisions at the end of the day. Is that going to increase the chance of selling the business, the probability of selling the business, or the value at which we can sell the business?
Yeah, I will go along with that. I agree with that 100%. The other question that I'll add that just comes to mind that I'll comment on also is that I think that too many people they think that they need to put more planning and get their company more ready to sell, which is like starting the company. You can plan all you want. Unless you go do it, it's never going to happen. And you can plan for oblivion, and you could have sold it 3 years for more than you might got it for today just because you wanted to get it perfect. That's my personal experience.
I agree with that. No, I agree with that 100%. So let me flip it around the other way, which is, when's the right time to sell? When you're ready.
Yeah.
There's no perfect time. We sold 5 months before COVID hit. COVID destroyed 90% of the value of the business that we sold, right? Did we have a crystal ball? No. Was it the grace of God? 100%, right? But you just can't know, right? You don't know what black swan event is coming. So run your business in the best possible way every single day that you own it. And when you start feeling like it might be time for the next chapter in your life, don't be afraid to step into the selling process. You don't have to say yes. You can walk until the wire transfer hits your bank, right?
Mm-hmm.
But what I see time and time again, that's the last thing I'll say, is the actual reason that someone is selling their business and they're talking to me is that they're burned out. And the problem with that is the business has probably started to trend down. Yes. And those are the hardest businesses in the world to sell because nobody knows where the bottom is.
Yeah, I agree. Guys, you can find Marvin and his work at Raincatcher.com. Clearly, my man here knows what he's talking about. And if you have a business to sell, getting that thing into an auction, I can't say this enough because there's this biz buy sell kind of idea that this is how businesses operate. You want 2 people buying your business. And if you can get 5, that's even better. So that auction format to anybody is absolutely critical from my perspective. We, of course, will link the Raincatcher.com in the show notes. Marvin, any other way you'd like the folks to get a hold of you?
Marvin.Karlow at Raincatcher.com. Marvin.Karlow at Raincatcher.com. It'll be in the show notes. And I always end with this. I love talking to business owners. Whether you think you're a minute from selling or a millennium from selling, I'd love to have a conversation with you. It's no pressure. We talk about whatever it is you want to talk about. We get acquainted. I just love hearing about the different ways that people make money. And if it's a good fit, then down the road, we'll work together.
I want people to hear that, and I'm out of time. I want people to hear that. I say that all the time also, which is there are so many business owners or there's so many professionals out there that are just happy to talk business. I am one of them also that just am happy. If it goes somewhere, great. But I love learning about what people are doing. And if I can give any kind of advice or any help, I'm always happy to do that. If it turns into business down the road, fantastic. But I like a relationship as much as any. I think there's a lot of us like that out here. And quite frankly, that's how most of my business gets done.
I'm 100% couldn't have said it better myself. Thank you, Jerry, for having me on the podcast.
Marvin, I appreciate it. Thanks very much. If you're doing over $1 million a year, I want you to listen to this for a minute because this is not for beginners. If you have built a business doing $1 million, $3 million, $5 million a year, you've already done something most people never will. You figured out how to make money. You built something real and you'll be fine. And I mean that. But fine is where a lot of guys get stuck. I have spent the last 25 years building, buying, and selling multiple businesses, doing over $450 million in revenue. And here's what I have learned. As you scale, the problems change, the stakes get higher, and the margin for error gets significantly smaller. At the same time, the bigger you get, the fewer people around you can actually help you. And the solution to this is actually simple. It's not working harder. It's getting in the right room. I'm going to tell you something that changed everything for me. I joined a group like this, and the truth is, I should have done it way earlier. It would have saved me a ton of mistakes, a lot of time, and a lot of money. So what is this room? This is the Kronos Cohort. Small, curated rooms of operators, not a big group, not open access, not for everybody. It's a group that meets monthly. Each person brings with them real issues. If you want to move faster, if you want to make better decisions, and get in a room that actually is going to sharpen you and make you a better operator, a better entrepreneur, I would say a better person. That's what this is. If you know you need that, go for it. Jump. Let's have a conversation.